Good morning, folks. What's going on? It is Monday, August 22nd. A little bit of an overcast morning here where I'm at. We can certainly start to tell, I don't know where you guys are located globally, of course, but where I'm at, it's starting to get to the point where you can tell it's late summer, you know? In the mornings, there's a bit of a haze over the water. There's just a general haze in the sky. You've got the smell of early fall starting to come up. No longer is it just like baking heat every single day. Things are cooling off a little bit. I'm a big fan of this time of year, late summer, early fall. I love this. If I could live in something that was like this all the time, that would be a dream come true in terms of climate. Not too hot, not too cold. Beautiful sunsets still. I would say that the sunsets actually get better as the summer sort of wears on into early fall. You get these beautiful golden hours that are just, they light up the entire. If you're on one side of the bay and you look across, or you're looking at some coastline, just absolutely gorgeous. But anyways, that's besides the point. Today is Monday. It's a brand new trading week. Let's get down to business in the economic calendar. What do we have here? Tuesday is going to be the first day that really kicks things off. We can tell that on Monday, which is today, obviously, we've got nothing lined up on the docket. So no big deal there. We're not really anticipating any large moves from economic data today, unless there's some sort of surprise, of course. Tuesday is where things really get interesting, right? We've got flash services, PMI there in the morning, and then at 10 o'clock, so I guess they're both in the morning, home sales and some more manufacturing stuff going on at 10. Wednesday, 8:30, we're going to get durable goods. So those are orders month over month, pending home sales. So some housing information basically early on in the week. This stuff's all, I wouldn't really classify this as big, like market moving type events. Sure, could there be a little bit of volatility? Yes. But as you can see, when we get into Thursday at 8:30, the preliminary GDP quarter over quarter, and I think there's also revisions coming out, right? This is where the market starts to waver a little bit more firmly, right? So definitely be aware of 8:30 Thursday morning. Of course, we will be live and talking about it here on stream, so we've got you covered, but that's where I would expect a little bit of volatility. Thursday, as always, unemployment claims, and then we're starting off the Jackson Hole Symposium, which is just a meeting, between the Fed and there's probably other people, government officials, big private industry, like executives that attend this type of thing, and they all get together and chat about monetary policy. So overall, some interesting things could come out of the Jackson Hole Symposium, but I don't think, if there's going to be like any large announcements that come out of that, I'm sure they're going to structure it in a way where there's going to be some sort of speech that's held or a conference or something, right? So just be aware that in the coming, I can't remember, it's 3 days, or do they go until Monday of next week? I don't entirely know. I might be completely wrong. Maybe it's just, it's at least here until Saturday, August 27th, but I don't exactly know. Does that carry into next week? Let's actually just find out by bumping the calendar forward. Yeah, okay, so it's just a 3-day event. It looks like we don't have any Jackson Hole stuff for the following week. So 3 days worth of meetings, right? Boom, there. And maybe early next week, if something were to come out of it, they schedule a conference to discuss, right? So overall, not really expecting a whole lot from that on the day-to-day. Anyways, that's kind of what we've got. Again, you can think about this as well. 10 a.m., Powell will be speaking. Is that going to be about things they've discussed on day one? I have no idea. I don't really know. Maybe someone out there knows and they can let us know. But overall, I would just be aware of some volatility as we move towards the latter half of the week. I think that was a really long-winded way of sort of going about just bringing that up. But nonetheless, we're going to move on here to our headlines. I tweeted about this morning, and I was already getting some backlash on Twitter. AMC shares tank more than 30% as Regal Cinema's owner warns of potential bankruptcy. All I said was I shared literally a picture of this headline and a picture of the chart. Anyone who's looked at AMC over the course of a multi-month period just knows that here's the crazy run-up, and then ever since it's been doing something that looks something like that. Okay, so I don't know. You can argue with me all you want if you think AMC is still going to 1,000, if it's going to $100 a share, if it's going to $500 a share. I'll do my thing and you can do your thing, and we'll just exist in separate worlds of the market. That's fine. So anyways, price doesn't lie. I thought it was interesting that this occupied the main headline of CNBC. I guess it says something that again, I think the movement was cool. The idea behind it was cool, but at a certain point, you got to kind of cut your loss there. I think this is a testament to how powerful the movement might have been, right? Just the fact that this is making the biggest headline on CNBC, AMC, the apes, and, the madness that's happening there. Kind of interesting, right? So they're giving them a little bit of credibility by splashing this up on the front page of the news. Anyways, that's neither here nor there for our trading style. We're going to get down to business with the ES in just a moment, but any stock-specific headlines that we need to be paying attention to, the energy sort of sector out there is really, really interesting here, especially with what's going on over in Europe with, out of control energy prices, right? And we know that we do not want to see the energy sector lead market rallies to the upside. So this is all kind of tying in very interestingly as we're coming into a little bit of a reversal in the market to the downside. Not a full-blown crash, not a full-blown, trend reversal to the downside. But yes, there obviously has been a significant gap down this morning. We'll discuss it in just a moment. But I do think that energy sector is something to continue to watch as more of a risk-off indication. McDonald's board adds 3 new directors in a shakeup. Are they going to add 3 new menu items? I don't know. Let's find out about that later. But Netflix just got downgraded to a sell after its 40% run-up from mid-July lows, which is interesting, right? They downgraded it right as it's potentially interacting with the bottom of an 80-point gap overhead. We'll, of course, check out Netflix in the core list of companies lineup today. Elon Musk says Tesla will hike the price of the premium driver assistance software by 25% in September. What will that do? I don't know what that will do for the share price. I do think it's kind of an interesting... I don't know what the price currently is, but 25% certainly seems like, if we're talking about... and if you guys own Teslas, you can let us know in the chat. But let's just pretend that... the software is $1,000. I might be way off. I might be kind of spot on. I have no idea. But a 25% increase, not to insult anyone's intelligence, we're talking about, now we're looking at $1,250. And I don't know if this is a subscription cost, a one-time fee. If it's a one-time fee, kind of negligible. But if it's a subscription fee, then that's certainly going to make a little bit of a difference there for Tesla and people interacting with it. Anyways, Amazon and Uber among the big winners coming out of earnings season. Citi projects the UK inflation to breach 18% in January as energy prices skyrocket. So again, the market kind of wavering a bit here as this bad inflation news is coming out across the ocean, really, in the European markets there. The UK not doing so hot on energy, and Germany, right? Germany on Friday dropped a bombshell, worst PPI since 40 or so. Like terrible read there. So the U.S. markets are starting to shudder in pain a little bit just based on that. What else do we have? Some political stuff. Evercore downgrades UPS. Okay, so there's a stock-specific headline. The 5 best U.S. states for quitting your job and launching your own business, probably places where there are minimal income taxes. Interesting, or just taxes overall. The 7 worst states to retire in, and none of them are New York. Interesting. Anyways, looking for more stock-specific information here, stock-specific headlines, not headlanes. RBC to downgrade DocuSign as the company deals with CEO search, challenging short-term environment. Interesting. DocuSign, it definitely had its heyday during the sickness where everybody was sending, that's literally how business started being done with these big, electronic document, secure electronic document signing companies. And, I think that there's been a shift a little bit away from, not so much away from doing that, but the boom, so to speak, is definitely over, right? The boom has happened and has passed. JP Morgan says the growth stocks rally has further to go and explains when it will likely end. It's a pro article. We can't read it. I'm not paying for CNBC. I'm not supporting CNBC. Being on their site in the morning for this period of time is support in and of itself. But that does pique my curiosity just a little bit. So well done, CNBC, with writing that headline. Definitely has me thinking about getting pro, but I'm not going to take that step. Disney CEO, again, distances himself from Bob Iger with the Disney Plus pricing decision. And I think that's really it for stock-specific stuff. So overall, a couple of negative headlines out there with downgrades to UPS and DocuSign as well as some concerning inflation risks across the pond, which is causing our U.S. market to obviously be opening quite in the red, right? SPY futures down about 50 points as of right now. So anyways, that's what we've got on the stock-specific headlines front. What do we have for earnings this week? Zoom, ZM after the close will be a big one to watch. After that, Palo Alto is okay just from a price point perspective, but it doesn't trade with great liquidity, so I'd be careful of something like that. Other than that, nothing really catches my eye in column 1 for Monday. Before the open, we're going to get a couple retail things here. This is obviously overseas Asia retail, right? What else? Dole, sure. That kind of falls into consumer staples, right? XPeng is the only kind of interesting. So actually, let me do it like this. Zoom, I'm paying attention to, probably here, maybe here. Tuesday after the close, what are we watching? Advanced Auto Parts, just because it's such a large, it's such a large company, and it may not seem it. You might not think of it as such, but Advanced Auto and what's the other one? AutoZone. Those stocks are massive. So, anyways, that should be interesting. And nothing else really catches my eye there. Wednesday before the open, obviously after the close, big boy NVIDIA, big boy CRM Salesforce, big boy Snowflake, Splunk even. Autodesk is all right, but I've never found it really that great of a trader. Same thing with Splunk. I mean, it's not great, but I would choose Splunk over Autodesk. What else? Before the open on Thursday, Peloton, obviously, Dollar Tree, Dollar General. Those will be big for the consumer staple space. TD Bank, interesting. Very, very late in terms of where financials usually report. Financials, were way, way earlier, and this one's kind of reporting here towards the tail end of this earnings season. So interesting. Affirm, maybe more of just kind of like this is a nod towards like consumer sentiment. If a firm is doing well, people are taking short-term loans, right? Pay as you go type thing. But really Marvel from a chip making perspective, Dell, I would say that's kind of it there. And then Jinko Solar on Friday, pass. Traded it once as it was making that crazy run up. What was that? That must have been sometime during the height of the sickness, but one and done on Jinko for me. I don't think I've looked at it since. So anyways, that's where my head's at on earnings. If you only had to watch a select number of things, obviously it's NVIDIA, obviously it's said that backwards, Salesforce, and obviously it's Snowflake. Okay, so Wednesday after the close is the big kind of day. All right, that's what I've got on the calendar that's catching my eye. We'll talk about it as we go, of course. And for now, let's get on over to okay, so I was taking a screenshot here of this nasty AMC chart. Again, look at the trend here. We're currently, I'm not participating in this, but the current opening price is somewhere around 1092. I mean, how do you argue that this is still a good investment, right? Pretty tough. Anyways, we're not going to waste any time on that. We're going to go on over to the ES futures. But first, let's check in on the chat. I've been neglecting to do so this morning so far. But first up in the chat, scrolling all the way up to the top, lots of messages this morning. So all the way, there we go. Philip M., that should come as no surprise. First up in the chat, good morning, sunshine emojis. Thanks for brightening up our day. And second in the chat today is going to be Plant-Based Will. So Nick Farrell, I'm sorry you were not able to keep your title as first in line here for the $50 PayPal. So Plant-Based Will, your streak starts today. If on Friday you have been in the chat first or second after Philip for 5 consecutive days, you, my friend, will have the opportunity for either a t-shirt, small, large, or double XL. That's all we've got left. Or $50 PayPal, whatever your choice is. So, Plant-Based Will, you now have a mission on your hands. After that, we do have Nick Farrell. Unfortunately, you were third today. So you will not be eligible for starting that or continuing your streak. You can, of course, kick Plant-Based Will out if you're here first or second after Philip on tomorrow's session. After that, we've got Ross, M. Spears, Christian, Jason, M.L. We've got Michael J., Raz, Rams, M. Spears, Ryan Speed, Live Better. We've got Tim J., Shane, Stevie J. We've got Netwell Chen. We've got Rolando. We've got Bill, Roger Tut, Dow Jones. Renato is in the building. Brendan S., good morning to you. We've got Matt H., Buckminster Wallace, Scalp Daddy Dollars is in the building. Inertial FBX. We've got Suresh, Tarushi, Siege, INF the Based Homie. We've got Derek, Jeff, Terry, Thesis, Carol, Houston, Texas, Miami Beach Broker, Strategic, Ty, Fern is here, Abel Vasquez, Thomas Invest, Infinity, Keaton Rogers, that's Sankofa, Voyager, Ida, I mean, the list goes on and on and on. We've got Jay in the building. Good morning to you. Jimmy Berry, Charlie, any other ones catching my eye here? Gregory Rulo is here, of course. And I think that's going to do it. Lioness, I see Alex Dickinson, Leonard. Anyways, if you did not get a shout out and you would like one, the earlier you can be here in the stream, the sooner you can say something in the chat, the more likely I am to get you. Do me a favor and hit the thumbs up button, and with that, we will jump right into the ES futures. We, of course, have a big gap up on, or gap up, speaking too fast, gap down, of course, on our hands. Big gap down, something like 40 points currently to the downside. And we need to stay objective here. We need to not get overly emotional on a gap down and start thinking, oh no, it's the end of the world. The market's going to go to zero. Could it go to zero? Yeah, anything can always happen in the marketplace, but let's be rational. Let's take an inventory of all of the data points we should be looking at and make a decision based on that, not the feeling that, oh no, things are kind of moving lower here. So question number one, as always, where are we opening in relationship to the prior day's range? Obviously, here's the high, here's the low of Friday. Big gap down, right? As we just pointed out, a 40-point gap down. So let's put a big old down arrow for question number one. Question number two, where are we opening in relationship to the overnight range? Technically, your overnight high is right here from the couple of, 30-minute session, basically hour after the market closed on Friday, right? Up here. So there's technically your overnight high. Here's technically your overnight low. Obviously, we're opening basically right on the overnight low. So a big down arrow for question number two as well. Question number three, what is the overnight inventory position? Net long, net short, what is the deal there? To do that, you just extrapolate the settling price from the Friday session. It's basically the overnight high. It was just straight downhill from there. So we are 100% net short. There is no, zero possibility that there's even any bit of net long activity here. Sure, could there be some buying pressure here that neutralized this down move? Yes, but now what's happened? All of this. Could this start to neutralize here? Yes, but overall, what would have had to take place from Friday's close is net selling activity. So 100% net short in the overnight session. Now, why do we ask these three questions? What is going on with the market here? Why bother identifying all of these things? Well, couple things, right? Question number one tells us that there's definitely going to be shock and awe on this morning's session. People are going to wake up this morning, and hopefully they're tuning into this stream right here, right now, and they won't be presented with, oh my God, I've got to make a knee-jerk reaction. But unfortunately, we can't attract everybody out there in the world who trades the ES, so there are going to be some victims of shock and awe. People are going to wake up and say, oh my goodness, the market's gapping down, I've got to short it on the open. Oh my goodness, the market's gapping down. I was long on Friday. I went out long. Got to close the position. Oh my goodness, I was short on Friday. I'm massively in profit. I got to take profit. I got to add to the position. I got to do something, right? So all of these reactions, all of these knee-jerk type, position adjustments, we'll say, are going to be happening earlier as opposed to later on today's session due to the gap down, due to the shock and awe. So we, as more astute traders, people who are paying attention to nuance, have the ability to say, okay, there's possibility for early morning trade here because we know that there should be something going on. Now, what is that something? That's where question number two and question number three come into play. Well, we're opening on a gap down. What is the first thing that we think about when we open on a gap down? Can we correct some of the overly net short inventory? Think about it like this, right? I'm going to clear up the screen just to start from scratch, and I'm also going to adjust this just a little bit here so it's easier on the eyes. If all of these people are short-term traders, which they most likely are, because one, look at the volume and look at the time horizon in which they are interfacing with the market. It's really between the hours of like 3 a.m. and, 8:30, 9, right? This is not JP Morgan. This is not Citibank. This is not Wells Fargo on the trade desk saying, you know what? Go out there and sell short, 1,000 contracts of the ES that we're going to position for a massive short in. That's not how that works, okay? So these people are short-term traders. They're overseas traders trading the U.S. markets. They are people with short-term time horizons, okay? So if these people are short late to the party and they do not immediately see continuation here early this morning, aka we do not take out and get acceptance under the overnight low, they start to panic. So what is the scenario that we're presented with? Well, we know there's possibility for early morning trades, so here's the framework. If we open here and we fail to take out the overnight low, so it means that we could trade underneath it for a split second, but we pop back above, we're looking for acceptance over the opening print to start to trade long to fill some of the gap overhead, because this group of people right here, who is short with the worst trade location, will start to close out knowing that they're short-term traders. Now, could some of, don't get me wrong, guys. I'm speaking in absolutes for example's sake. Not every single trader in there has a short-term time horizon. I'm sure that there's, some traders in there who are positioning for a larger short, doing this, doing that, hedging this position, doing this. I'm not saying every single one, but a majority of those people are not traders who are positioning for, again, a 3-month hold as a new money seller in the ES. That doesn't take place in the pre-market session, okay? Could some of that, could a very, very small fraction of those traders be that? Yes, but generally speaking, these are short-term traders. So in knowing that, we're watching for some of this short inventory to squeeze out if we do not accept underneath the overnight low. Now, I have to give you the caveat here, though, that we're opening on a very, very large gap. As we've pointed out, this is about a 40-point gap down, 42.20 roughly down to 41.80. We're currently trading 41.80, so let's just call it a 40-point gap down, right? Generally speaking, in the ES, we watch for gaps that are roughly 25 points to classify as being quote-unquote large, right? So anything that's greater than 25 points, we start to say, all right, there's actually the possibility that this gap may not fill on the open here. As you get into gaps this large, there's really two things that take place. Number one, as we pointed out, this inventory, if they get burnt early on, they'll start to close out, right? And that'll be some upward pressure for the market. But number two is that you still have people recognizing, okay, big gap down, there's been a shift in tone in the market. If on the open, those people start interfacing with the market, selling it short, because that is a possibility, right? We can open up here and people can hit it short. I'm not saying that won't happen whatsoever, but now you have two counterbalancing forces. These shorts, who if we push a little bit higher, will start to close out, and the new money shorts, who are looking for lower, starting to push lower. So what does this do? Again, it gives us a really sideways open here in the ES. So because of the size of the gap here, what I would really point out about this morning's open, and something I would want you to carry forward here, is managing your expectations of what the market can do on the open. All right. And I know this, this is not a black and white type thing. This is not a yes or no type thing. This is not a long or short type thing. This is just being mindful of, again, your own expectations of the market. If this just goes sideways and does nothing here, because we have those counterbalancing forces, you get people who see the gap down, they want to buy this thing, they think it's cheap, they think it's on sale. You get people who see the gap down, they say, you know what, this is the start of a new leg lower, we're going to short this thing, we think it's going lower. You get these two counterbalancing forces. If the market goes nowhere, don't be surprised. If you can just prevent being surprised in the market, you will save yourself a lot of grief. Anyways, in terms of the frameworks I'm still applying to this open, because, just because the gap down is large, just because we might need to manage our expectations, it doesn't mean that we're not looking for the trade. We're just not going to be disappointed if it doesn't work. We're just not going to be disappointed if we get a partial gap fill and then it kind of fizzles out and does nothing for the rest of the day. We digest the gap, right? We're not going to be disappointed if this opens and then just dribbles slightly lower and then drifts underneath for the day's session, right? So, look at that. It actually just started raining. I've got a wide open window, which I need to just shut a little bit, so bear with me. It's actually, wow, I don't know if you guys can pick this up on the mic, but it just started downpouring. So let me adjust these windows so my computer doesn't short out on a wet wire. One second, guys. 1 second. All right, I'm back on the mic. Windows have been secured. Tech is safe. We're not going to short out here. We are all good. All right. Sorry for the little break in the passion for that little bit of a rant. But anyways, we're going to be okay with any kind of outcome here on the open because we know the gap is sizable. But anyways, just to give you something a little bit more concrete, I don't just want to say, hey, anything can happen. Do whatever you'd like. That's not the point. I think from an expectation standpoint, that's a really solid place to be, but we do still need some sort of framework. So again, here it is. If we open here and fail to take the overnight low out and we move back higher through the opening print, I think that these shorts late to the party get nervous and start to close out, adding a little bit of buying pressure to the market in which case we're looking for some upward lift in the ES. Now, again, would I look for the full gap to fill on today's session all the way up, 40 points higher to the prior low of day from Friday, 42.20? Probably not. My first place that I would watch out for is probably half back of the overnight range, right? So if I do something like this, take out the fibs and go from the low, let's actually just look at half back of the gap, right? That would be somewhere in here, roughly 41.98, call it 4,200 even. We also know that 4,200 is an important, not only psychological number, but on the market profile, which we can point out in just a second, that's an important backtest area as well. And it's, not quite all the way there, but it was the flush point in the pre-market session as well, slightly higher, right? What's that number? 42.03. So this general zone in the ES is where I would look to start taking off some of the longs if we start to see a gap fill on today's session. I'm not saying be all out of the position, but take off at least half the position here and then monitor to see if we can get a little bit of continuation to the upside in the instance of a really bullish market here. So that's the upside. Excuse me. Here we go with the opposite, right? So if we just putter around here and we don't really get a failure of the overnight low, we don't aggressively trade higher. If you want to be a little bit more conservative, by the way, in the long trade, you're just looking for obviously a break of these highs. That proves all of these shorts wrong. That's where they're underwater. That's where the squeeze can come. So a more conservative trader, even if the open is here, might wait for a break of these highs. And that number, by the way, is just roughly 41.87. 41.87. Over that can initiate a little bit of a short squeeze, right? So anyways, two things to say to the downside. If we just remain here, if there's no big failure at the overnight low and then something that does this, because this would indicate trapped sellers in the regular trading hour session, disappointed shorts from here as well, not getting paid. If there's no failure, if we go sideways in this box here, then yes, breakdowns of the overnight low can get nasty because you might notice we have this big yellow box underneath us. What could that yellow box possibly represent? Well, I don't know. Let's consult our hourly time frame chart. What's going on the hourly? Oh, there's the yellow box. Do you guys remember what this was right on over here? That's right. It was the CPI gap up. So there's really a big hole in the chart underneath us in this yellow box. I'm not saying that the market will immediately rotate all the way down towards 41.40, but I'm saying there's a lack of structure in there. It should be easier as opposed to harder for the sellers to push through this area of virtually zero structure, right? So carry forward, the CPI gap is right directly underneath us. If we fail to go higher, if we fail to squeeze these shorts out, then we can drift lower into that large gap underneath us. So there's a lot of dynamics here happening on the open in the ES futures. If you're a little bit hesitant on thinking, I'm comfortable taking this trade or I'm watching for this setup, it's fine. You don't have to trade the opening bell, right? You can give it 30 minutes, an hour to determine some sort of trend or some sort of direction or better structure in the regular trading hour session. And then you can make a choice, right? No one is holding you, at the computer saying, press the button as soon as 9:30 opens, right? So anyways, those are some thoughts on the ES. Basically, where my head's at is I will be watching first for some sort of gap filling, right, to the upside. That's my first thought, just because that's what the framework says. That's what my experience says. That's what I'm watching for. If it doesn't work out, and again, my expectations are pretty low. I'm not going to be disappointed if this doesn't fill the gap or get to 50%. It's a large gap. Things don't always work out to the T when you have a large gap. So expectations are pretty low this morning. All right, that's where my head's at. Let's see what the chat thinks on today's session. I'm going to clean up those fibs and we'll take our poll here. So if you're bullish on today's open, then you think we're going to do something like this, fill the gap. Maybe it's a higher low pullback and we come all the way up. So this doesn't have to happen by like 10 o'clock, but throughout today's session, if you're a bull on the open here, if you're a bull in the chat, you think we're going to fill the gap to the prior low of day, that's a caveat of a number one. If you're more neutral, thinking that, yeah, we might opening range here, we might partial gap fill, 50%, pull back, explore the CPI thing, really more of a sideways trend, not developing a large directional bias, drop me a number 2 in the chat. And then, of course, a number 3, I feel bad for the 3s. They're always off screen here. But if we're going to open lower and then, lower high in the CPI gap up and then just fill that gap to the downside, drop me a number 3 in the chat. Of course, if you think it's a combination of any of these things, drop me a number dash a number with what you think is going to happen first as the first number. And then if you don't know what's going to happen on this morning session, drop me a number 4 in the chat. And it's okay to not know, essentially, in the chat. So 4s are an okay response. I'm going to fire up the official poll. and see what we can get there for responses. If you haven't hit the thumbs up button already, I would just ask one more time that you do, and we'll leave it at that. So what do you think will happen? Question. I'm going to take my break on the mic and, of course, mutter to myself, as someone pointed out. Bullish. 2. Neutral. Add. And we'll go with 3, which is bearish. And 4. All right. That is live out there in the world. Let me scroll up and see what we've got from a responses standpoint. All right, up. Hey, Johnny Whitaker, thank you for joining the channel as a super supporter. Greatly appreciated. You've got a cash bag next to your name, and it looks like it's an upgrade in terms of levels of support. So thank you for being a longtime supporter. That looks like an orange/gold cash bag to me. You've been in the game, and you've been joining and supporting the channel for, I think that, what is that? I think that's at least 4 months. 4 months, so quite some time. Thank you for that. Appreciate it, and I look forward to that cash bag turning gold for you. After that, what do we have? Crypto Commandos in the building. Small Good Decisions is here as well. The tech is safe. All in. Yeah, no, that was a joke. That was totally a joke. My technology is safe. My computer is not going to short out. The rain is no match for me. What else? That's kind of it. Kyle Stearns, good morning to you. Kyle is a longtime viewer of the channel. Really appreciate Kyle, one of the guys who's been here since the very beginning. Anyways, first response is from Mir with a number 1, Disaster Tank with a number 1, Scalp Daddy Dollars opposite of them both with a number 3. After that, we're a little bit more neutral with Buckminster Wallace as a number 2, Alex Rodriguez number 3, Jay with a 2, 3s, 2s, 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 couple of 4s, big number 2 from Inza, Greg with the 2 as well. I would say the majority of, as I'm just scrolling here, majority of responses to our poll are definitely falling into the number 2 and 3 camp. I think we were a little bit aggressive with the number 1s in the beginning. They definitely seem to have been tapering off as I'm scrolling through the responses here. ETG2 Cool is the first number 1 I've seen in quite some time. Other than that, it's all 2s and 3s straight through towards the end here. Alex Dickinson with the number 1 towards the end. Yeah. Ben with a number 1 as well. So overall, the chat is definitely leaning a little bit more neutral to bearish on this morning's open. And I would say that there's an obvious sentiment shift here. Like if we were looking at a daily time frame chart, obviously it's a pretty sizable gap down, and we're getting into some critical support there. We'll look at the SPY in just a moment. But for those of you who are just tuning into the stream, appreciate you being here. These are ultimately the outcomes that we're looking for on today's session. I'll just give you the rundown of my structures. If we open here, fail the overnight low, we're looking for longs if we can take out the opening print or the top of this little pre-market digestion right here. The idea, the thinking behind that is that these people are short with terrible trade location. They're basically short at the lows. If we take out the highs, they panic out of the position, applying a little bit of buying pressure to the market, and we can fill some of the gap. I'm personally looking for about 4,200, which is about a partial half gap fill. After that, yes, monitoring for continuation into the prior low of day, but really managing expectations on what is a 40-point gap here in the ES. Really, we could just go sideways and completely digest this on today's session. If this doesn't happen, if we do not get any gap fill activity, we should go in the direction of the gap, and we know that there's a lack of structure in this yellow box from the CPI gap, which was, 2 weeks now ago? So watching that to the downside, really very, very little structure if we continue lower here. So those are my thoughts. First thoughts, if that doesn't happen, if we opening range out and break the overnight low, I'm probably waiting for a little bit more confirmation, a lower high in there, some sort of back test that fails the overnight low, right? So a break, retest, and then go, something like that to set up the downside. All right, that's the ES futures. Thanks for sticking with me through it. Let's take a look through our sectors now, because the ES can ultimately only do what these sectors decide to do. And we'll make this a reasonable time frame to look at on the left-hand side. There we go. 6 months is good. What's going on in the XLF? Obviously, a big gap down here underneath the 3461, which opens the door for possibly moving for a full retest to 3373. In the grand scheme, excuse me, my apologies for coughing on the mic, but in the grand scheme of things, this is okay for a higher low to form here. If we see a hammer and do something like this, on the weekly time frame chart, it just builds out in inverted head and shoulders like this, right? So that's a possible outcome over the course of the week. On the day-to-day, like opening up this morning, yeah, it's a bearish implication for the S&P 500. There's no doubt about that. I don't want to be like overly bullish here in terms of thinking about long-term structure. It's just hard for me to really get in the bear mode when we're still in a bullish uptrend on the daily. So that's besides the point. Implications for this morning's open, of course, are that we are watching for inventory correction, a little bit of upward lift to correct the overly short inventory at the lows. But when and if we close the gap to 34.90, watching for rollovers, right? So that is kind of the that's what we're expecting here, just based on the gap down, right? So any inventory correction takes care of these shorts that are poorly positioned. The better, more astute traders are patient, waiting for the gap fill here, or some partial gap fill area to start to sell it. They're just mindful enough that, hey, probably entering short dead on the lows is not a wise decision, all right? So that's the XLF. Of course, bearish implications for the marketplace as a whole, but being mindful of inventory correction first, partial gap fill, and then looking for shorts up against 34.90. Next up, energy sector. This one's holding up all right? It's sideways in the range. It's continuing to hold up the daily breakout point over here. What does that mean for the marketplace overall? It basically just says that we're still kind of in risk-off mode, right? This is sideways. This is bullish, and the market's obviously not faring so well right now. And this being a defensive sector, not really that great. And we talked about the European energy crisis that's kind of going on over there. Not really, not a fantastic look for our market. So overall, I'm carrying forward that the energy sector is indicating some risk off. And as long as this is holding up at the highs, I'm going to continue to carry that forward. Next up, XLP, consumer staples. 4-day balance was in place, obviously gapping down big time underneath the lows. Where does that bring us in terms of next supports underneath? So definitely bearish. There's no doubt about that, right? This is now overhead supply, probably looking for pullbacks into 75.66 and reevaluating the chart when and if we get here. All right, so XLP still in an uptrend, don't get me wrong. Pullback here is not the end of the world. It's just below us. Actually, I guess it's a little bit further away than just below us. You can see there's quite a distance to go there on the 30-minute intraday chart. So overall, XLP probably looking bearish on the open because are we underneath that low? We're opening right at it. All right, so here you go. This is what I would watch. Here's the container bar, obviously, right? We're opening right on that for all intents and purposes, slightly underneath. If we accept above, all right, fine, a little bit more neutral. Definitely, not bullish by any stretch of the imagination, not bullish. But if we open above, stay above, fine, a little bit more neutral. If we break down underneath that, that opens up the door for that pullback to unfold into 75.66. Obviously, downward pressure for the S&P 500. All right, that's your XLP. Next up, we've got the XLY. What's going on in consumer discretionary? So without really any clear candles, 165 is the opening bubble currently. Big gap down, obviously, inside of this range. Look above and fail, as we pointed out in the Sunday video last night. So yeah, downward pressure is to be expected here in the XLY. The chart does not look fantastic for any sort of bullish pressure on today's session. Again, be mindful, inventory correction can happen, but it's just shorts here getting taken out. This is short, this inventory correction that we keep bringing up is just short squeeze from, the worst location shorts in the pre-market session. This is not new money buying. Could it be? Again, some fraction of it maybe, but it's just inventory correction. So we're not thinking of this as like big bullish pressure for the market. It's just inventory correction. It simply is what it is. I don't really think that there's another way to put it. So hopefully that makes sense. This is not like, these are not the types of buyers that would be sending the XLY to 185 on the next leg higher. Maybe I should put it that way. Next up, materials, XLB, builders. No, it's not the building sector. It's the materials sector. Anyways, big gap down here, right at the prior highs from this consolidation and flag. Overall, I do think that this can offer a little bit of support. So again, watching for inventory correction first, not necessarily just immediate breakdown here in the XLB. If it does just continue lower, it's such a lightweight sector. It's not going to be an overly large drag for the S&P 500. So moving on, XLI. Here's the trivia question: what's the percent weighting of the XLI in the S&P 500? There's the trivia question of the day. You guys should know this. I say it every time. But anyways, XLI. Let me know in the chat what the weighting is. And with that, in the pre-market, obviously opening up towards these lows, 7%. Siege, absolutely correct. VM, absolutely correct. 7%. Don't you forget it. XLI, 7% of the S&P. Anyways, opening at these lows, obviously gap down, being mindful for inventory correction. But yes, we're falling out of a larger balance area here on the daily time frame. So more sustained short selling and, just downward pressure really can be achieved here in the XLI. Lucky number 7, absolutely correct. Alex Rodriguez, absolutely correct. Austin M. Spears, you guys all nailed it. So XLI, watching for lower, of course, a little bit of bearish drag for the S&P 500, mindful in everything for inventory correction. Partial gap fills, again, tell you something about the market. I suppose we'll talk about partial gap fills on the SPY, all right, when we get to the SPY. XLC communications really weak looking, opening around this 50, actually slightly underneath the 57, which is not great. Remember on the daily time frame in the weekly watch list last night, we just sort of pointed out that 57 is going to act as a bit of a line in the sand. I mean, in the grand scheme of things, as long as we're above the support trend line, that's fine. But I mean, guys, you got to admit, 2 pretty substantial failed breakouts, not ideal if we're underneath 57 in the XLC. So I think longs are getting disappointed and sellers are starting to take advantage of that fact, right? So the first one was this fake break of 57 right here. That's disappointment number 1. Disappointment number 2 is break what looks like a beautiful retest here and then lower on the Friday session. So disappointment number 2. If we're underneath 57 again, all of these people who, at first were disappointed, now they're like, okay, this is all right. We're still above 57. These people for sure are all like, what the heck? This, absolutely flopped in the XLC. So I think underneath 57 is a critical flush point here. So be mindful of this open, that it's going to be make or break in communications, like pretty much right off the bat. Do we accept into the gap overhead, or is it just lower or even sideways underneath 57, much more of a bearish implication for the S&P 500? So 57 in your communications sector, real estate, lightweight sector, gapping down big time, yes. End of the world, no. Lightweight sector, not going to make or break the market. So moving on. XLV, this is where we got to spend some time, guys. Unfortunately, or fortunately if you're short, we have a look above and fail now. We will be opening underneath 132.70. It's not to say that we can't rally and close the day back above, but ultimately with an inverted hammer on Friday's session, with the sort of failure back down underneath this critical level, I'm definitely looking at this as more of a bearish implication for our marketplace, right? So watch for some trickle lower here in the XLV, and being the second heaviest weighted component, not ideal for any longs in SPY. Now, one thing I will say is, let's say that the XLV does do the whole look above and fail and it makes it to the bottom end of the range. When and if we get to the bottom end of the range, I'm going to be watching out like a hawk for any signs of reversal off of 130.50. And if that coincides with a higher low pullback zone in the SPY, then guess what? We're, game on. We know that the weekly trend has reversed to the upside. It would be reasonable to start looking for pullback buy opportunities out there in the marketplace. Okay, so that's your XLV right off the pullback here on the look above and fail. All right, that's what we've got there in the healthcare sector. Next up, XLK, tech sector, heaviest weighted component of them all. What do we see in the tech sector? Obviously continuing to reject that 200 SMA here on the daily time frame. Big gap down, big gap down. Where are we in relationship to the CPI gap? So we're in the CPI gap. What I'm going to do is I'll just do this and we'll change that. I just want to be able to see where the opening print is over on the daily time frame. So we'll just do that. So this yellow bar is where we're opening on the daily. You can clearly see that that is inside of our CPI gap up. So opening in a double gap, right? I would think that the first sort of idea would be long to close the gap overhead for all the same reasons we discussed in the ES futures. And then we'll sort of redetermine whether or not we can gap fill reverse and then close the downside gap, which would be the CPI print close to 144.79, 144.80, right? So look higher first, inventory correction, but ultimately, if it does move lower, you've got a clearly defined target, all right, 144.79. If we do something like this and then break down from an opening range, of course, bearish pressure for the ES, but there's a tradable idea in tech as well into 144.80 from the XLK. So overall, really interested in seeing how this pans out here. And my first thought would be higher first, and then if we roll over off the gap fill here, then it's lower to close the gap underneath. Or it could happen in the opposite sense as well. I mean, there's a trade for everybody out there, really. If it goes lower, I'm probably personally not looking to short this into the gap close. Instead, I would say, okay, can we support off of 144.80? In which case, I'm looking for longs back up to the opening print. All right, and obviously that would mark an intraday reversal point if this scenario unfolds in the ES, right? So that's your XLK. This one is definitely going to be just like the XLV. I'm watching for that look above and fail to resolve. I'm watching the XLK to resolve the CPI gap. Which of these two scenarios happens, that will tell us something about the market, right? And it'll give us intraday inflection points, both here on the bottom side gap fill and both here on the top side gap fill. If it's just sideways, I mean, the S&P is likely going to be going sideways as well, digesting the gap, right? In which case, there's not a whole lot to do. Next up, last but not least, the Utes, gapping down a little bit here, but still making new all-time highs. Just like the energy sector, this is D for defensive, concerning, especially with what's going on over in the UK. This is kind of definitely falling into the more risk-off category. All right, that's the sector rundown. Let's take a quick peek at the SPY itself. We've got 9:17 on the clock. We're going to wrap this one up a little bit early. Of course, on the gap days, we do wrap up early because there's possibility for early morning trade. In the SPY, let's quickly do the same thing we did with the XLK here to just see where our opening print is on the daily time frame. So there's a yellow dashed line for you at 3 thickness. Good. So not quite opening inside of the CPI gap up. That, of course, is right here. We are opening above our critical weekly support that we discussed in the weekend update at 415.35. So I'm personally of the belief that, this is an area where sellers are kind of pushing their luck of what can be achieved to the downside. Again, I don't think it's wise to be chasing this short here on this morning's open. I think waiting for a little bit of resolve, honestly, or confirmation to the downside would be required. I think inventory correction can happen first, or sideways digestion of the gap, right? Sideways digestion of the gap. Do be mindful. We talked about this in the weekly video. There's 4 days of overhead supply above us. So these 4 days worth of overhead supply can continue to sell. I think that a majority of it happened on Friday, and even here in the overnight session, we're kind of feeling that pain of those people dumping the position, long liquidation, right? So from that perspective, yeah, there might be some downward pressure, but just be mindful that 415.35, really, really important area here on your S&P charts, okay? Really, really important area. So I'm watching that to the downside. And again, just another reason why I'm not willing to just blindly hit it short on the opening bell. All right. So that's the SPY. Let's take a quick peek at our QQQ. Big red day, it looks like, from Mint. I don't know about that, Mint. Could it be? Absolutely. But, I think just being a little bit more cautious as opposed to boom, short right on the open, expecting that. I think being a little bit more cautious might serve you well on a large gap down as such. I just think there's so much of a skew in inventory that a little bit of lift to the upside to pull some of those shorts out might be warranted here on the open. We can, of course, reassess after that, but one step at a time. Good morning to you, PH Space D. Do you have a PhD? That would be cool if you did. Anyways, QQQ, and we've got INF, of course, the based homie, giving us the based in the chat. Thanks for tuning in. So anyways, QQQ, same exact thought process and ideas here as what we just discussed in the ES. This is not opening at the bottom end of its weekly expected move. All right, so we have this 318, which is literally where we're opening here from the prior highs and prior pullback low in here. This technically will be filling the CPI gap on the opening session. Now, don't get me wrong. This does not count as being filled in the after-hours session. We need to trade through this area in the regular trading hours session before we count it as being filled. What I'm getting at, though, is we're opening right at the gap close area. So overhead now is where the gaps exist. It's no longer a gap underneath us, right? So, excuse me. So in terms of knowing that, again, your thought process should be if we fail 318 to move lower and we take out the highs of this little consolidation period here in the pre-market, I'll give you that number, roughly 318.50, right? If we take that out, these shorts late to the party get squeezed and we fill the CPI gap, this time from the bottom up, and the day's gap down from the bottom up, all right? So QQQ, watching for a little bit of a move higher here on inventory correction. If we move underneath 318, I would probably look out for shorts in the Qs as opposed to the S&P just based on where we're at in relationship to the expected range for the week, right? So you can clearly see there's a little bit more downside available here in the Qs. We know that the Qs have been relatively weak anyways. So knowing that it's relatively weak, knowing that there's some more priced in downside, I would look for shorts in the Qs instead of the SPY. All right. Island reversal. I thought an island reversal was when you have something that looks like this. So bar, 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 big gap down bar, and then you gap up and over it. That would leave this as your island or abandoned baby, whatever you want to call it, and then you move back in the other direction because these people are trapped. I'm not sure that we have a complete island reversal, Simon. I don't know. Maybe my interpretation of the pattern is wrong. So you can certainly correct me if I'm wrong in the chat. I love learning more instead of just sticking to beliefs that are wrong. So let me know. I'm certainly willing to change ideas on that one. Anyways, IWM Russell 2000, the small caps. What's going on here? Obviously a gap down as well. We're opening at 192.27, so somewhere in here. So again, a little bit more downside can be achieved in the IWM. Watching 190.71 as a critical support here. So if this level is achieved on today's session, I really want to see if that can be the bottom for the week and we can reverse off of it. That would strike me as a very bullish implication and more of a risk-on sentiment from small caps here. All right, so that's your IWM. Watching that one like a hawk at 190.71. Can we hold up for support here? Ultimately, on the daily and weekly time frame, it would preserve this trend, right? Higher lows, higher lows. This is obviously the low here. We want to be above that, 190.70. You could just round it off to 191, actually, now that I say that out loud. So anyways, I would say a majority of things are definitely threatening bullish island reversal. Oh, what I described on the screen. Gotcha. Cool. So thanks for clarification on that, Simon. But I would say just based on everything we've seen in the broad market so far, we're definitely anticipating, the tone shift, right? The tone is clearly shift. It's not nearly as bullish as it was as we were just screaming higher day after day. We're finally getting a little bit of sell side activity, but so far, I say that importantly because we will shift our tone if things change. It is all above critical structure. When we start breaking down through critical structure, I will certainly be the first one to say, yes, we are changing our tone. But as of right now, we're still above it. We're still above 190. Let's call it 191 in the IWM. We're still above the QQQ 318. We're holding on by a thread. Ultimately, the line in the sand is here. The prior highs on the weekly, right, 311. So fine from that perspective. And the SPY is ideally above its 415, right? So all good from a structural perspective. A little bit of pullback continuing to unfold. We're watching to see if we get higher lows or if we smash all of this structure to the downside. I would say, based on the pre-market indications of the broad market, we're watching for higher first, inventory correction, and then reevaluating what these charts can do on the gap closes. If we get partial gap fills, that's what I forgot to talk about. The partial gap close, right? So let's do it on the ES screen just because it's nice and big. If we get something that does this, right? Fail, higher, partial gap close, and then rollover, that tells us something about the market. The buyers should have no problem, especially in an uptrend, being able to close the structure, right? And maybe not today on one day's session, but maybe over the course of 2 days, 3 days, whatever, the buyers should, in an uptrend, be able to close the gap. If we get a partial gap fill and a hard rejection off of some unknown level, again, I was just using the 50% gap fill as a rough guesstimate. It tends to be a place where the market is attracted to, 50% of the gap. If that hard rejection comes, again, the buyers are just showing their hand as not entirely sure or confident in the upside continuing. All right, so partial gap fill is technically a bearish implication because the buyers did not do what they were supposed to do. Okay, so in terms of levels of bearishness, obviously the most bearish outcome is sideways and lower. Second most bearish is partial gap fill and reversal. Third most bearish is gap fill and then reversal off of the gap fill. Okay, so there's levels to this game. All right, let's take a quick tour through our core list of companies and we'll wrap it up here. Oops, sorry, we want Apple up first. Misclick there. Getting ahead of myself. Apple, big gap down. Obviously, inventory correction is the look. We're underneath 171, gapping into roughly the support trend line, slightly above, not quite all the way at it yet, but we're opening basically here. So watching for inventory correction first off of the support trend line. That also strikes me as a bullish supporting piece of evidence that the market can move higher here first instead of lower. If it breaks, of course, it's all about this gap down underneath 167 to 165.25. First thought, though, of course, is inventory correction. Next up, Netflix. What's happening here? Filling the gap to the downside in the pre-market. Remember that this doesn't technically count as being filled yet. So we're opening here. That means the gap is overhead on both fronts now. So watching for upside inside of Netflix as well, inventory correction. If it doesn't move higher, I wouldn't really look to get actively short unless there's a breakdown of 228.13. So really patience required in Netflix as long as we're above 228. If you want to trade it long for the gap fill overhead, that's probably a tradable idea there, but not really seeing an obvious short just yet on the opening print. Next up, Tesla. What's going on here? So obviously firmly still inside of this, it's pretty darn close. It's firmly inside of this choppy range from there. So I think patience is kind of the play. The hammer it does not look like a break of the hammer high will be in play this morning for a daily buy setup. That would kind of be off my radar for this morning's open. Instead, how do we resolve this level right here? Prior low of day and the pre-market high, 877.71. If we're above that, fine, neutral. If we're below that, obviously leaning on shorts for the breakdown of 865.70. Next up, Google. What's going on in Google? This one has been relatively weak for some time on the pullback here. We talked about that in last night's video, watching for continued downside in Google. So yes, inventory correction. Probably wouldn't look to play long in Google because it's the relative weakness sort of leader, if you will. It's the leader of relative weakness. I would rather look for shorts up against some of this inventory correction area and then roll over, right? So Google strikes me as a place to look for shorts, which makes sense because we know the Qs are weak anyways in relationship to the S&P 500. Next up, we've got our Meta. What's going on in Meta? Again, relatively weak. I would say this is more akin to what we have in Google. Obviously, the XLC for the communication sector, big time players in that space, right? So underneath the prior highs in here as well, strikes me as bearish. Got to be kind of a look for lower. Again, inventory correction, I wouldn't want to participate in the long side there. Instead, watching for shorts up against the backtest of the gap close or just general failures around this 166 level in Meta. Next up, NVIDIA. Big gap down. Earnings are later on this week. I think that options premiums will be kind of inflated here. This one's pretty tough. I would say, because we're opening kind of so far away from this 181 quarter pivot, I would have liked to see if we could have opened here, back test, and then rolled over off of that level. That would have struck me as a decent looking trade, but opening already on these lows, I mean, that ship has sailed, right? So I would watch for the inventory correction in NVIDIA instead of looking for the short in NVIDIA per se. But again, options premiums will be inflated based on earnings. Maybe avoid it until it just passes. So we'll see. Microsoft, speeding through these last few, we got to get out of here. Microsoft, watch your gap overhead just because it's the double gap and we have lots of support off of this sort of top end of the range. If we just accept here and can't get back above 283, neutral. I wouldn't really look for new shorts inside of Microsoft. Last but not least, the mini beast. We've got Amazon, then we're out of here. We've got sideways on the gap down. This strikes me as, again, the trade that I was looking for has sailed. I would have loved to have seen a lower high underneath that 140 reattempt for the breakdown there. You guys know that's what I was watching from this daily structure. We're already inside the daily structure, which again gets a little bit difficult to trade to the short side. Instead, if we rally, I'm just watching for reattempts at 137.58 for any shorts to roll back over. All right, we've got 9:29 on the clock. I'm going to run. That way I can catch this gap open. Hope you all have a great trading day. If you're not in the Discord already, join the Discord. It's linked right down below here, also in the description. I wish all of you a green trading day.